Hello again everyone, I hope you are all having a great day. Though if you had been holding MRIN before yesterday, you probably are not. I didn't intend to do another Marin Software video so close to my last one, but given the dramatic moves the stock has been having and the catalyst event of a press release detailing Q2 earnings that came out in Thursday's session, I think I need to do a quick covering of what is going on. So in this video, what I want to do is have a quick look at the movements in the price and give some basic analysis, as well as have a look at some of the details of the Q2 earnings press release. We will also have a quick look at the current shorts data available before I give my final thoughts on what I think the stock is going to do in terms of pricing going forward, as well as what I want to do with the stock. Now, what I say here, and I think perhaps needs to be stressed more so for Marin Software, is that this is not investing advice and just my own reflections. This stock has been on a 2-week roller coaster ride and we seem to be coming off the big dip. What awaits around the corner could be anyone's guess, so approach this stock with caution. This is not for the faint-hearted. Let's get into it. So looking at Marin Software over the past 2 weeks on this 15-minute chart, and I know I've covered this a few times before, but we can see the very sharp rise from less than $2 a share up to a point where it hit an intraday peak and an all-time high price of $27 over here, before going on what is actually quite a sharp and steep decline down to our current price level of $9.97. If you look at the oddly shaped Bollinger Bands, you can see why I have been avoiding trading in this stock since it began to fall from its peak, as this represents highly volatile and unstable periods of pricing. One of the major plays on Marin Software was the short squeeze, which did definitely see some major action early on. So all the short interest that was mounted here, this would have squeezed a lot of people out here. However, since its peak and up until Wednesday's trade, this period here, there was an increase in short action, and I think a lot of people who had bought in at above this price mark here, where the share currently sits, has probably actually been able to make quite a bit of money from short selling. While the outstanding short float figure was at 47% on Wednesday, I dare say that given the downward trend and some of the short data we will look at a little bit later on, the overall short interest has probably dropped in the stock. Now, very quickly, we can see that yesterday's trade started off with a big drop. Here is the first candlestick of the day, that red one there. This drop was likely further spurred on by the Q2 information that Marin Software released, which we will go through very shortly. Following this initial sell-off period, there was a temporary rally where it peaked at about the $12.40 mark over here, before going on a steady decline and closing the day down at $9.97 per share. Now, on a side note, if you want to see a potential sign of insider trading on the stock, look at the last candlestick from Wednesday's trade. That sharp sell-off to me shows that people knew there was information coming that was likely to elicit an unfavorable market move. This is not uncommon in many stocks, but is perhaps more pronounced with Marin Software given the small market cap and share float, leading to greater and faster swings in the stock price movements, as we have seen in the past 2 weeks of trade. While the stock did not fare well for those who were long on it yesterday, even with its downward trajectory, there were a number of good day trading opportunities on this 1-minute chart once the stock reached around the $10 mark, as indicated by these purple marks that I've just placed on the chart. These opportunities are symbolized by the normalizing behavior of the stock, both with its movements within the Bollinger Bands and the normal range of movement within the relative strength index, once the sharp moves in the stock price at the open had dissipated. This to me is perhaps a sign that the stock could be normalizing and could be a target of more conservative day trading movement once again. However, I will hold off doing so for now, I think. Now, just looking at one last chart, despite Marin Software closing down 27% on the day, one silver lining is that it managed to climb another 33 cents in aftermarket trade. To me, that could be investors jumping back in, albeit on a smaller scale, due to the tiny trade volumes that come from these type of sessions. The reason for this might be perhaps the market reaction to the news that dropped during the day's trade is perhaps not as bad as people thought, all things considered. It is also worth pointing out that the market cap has come down quite significantly now, putting the company close to the $100 million mark. About this time last week, this market capitalization was almost $250 million. So people following the company have really been on a ride with this company lately. here are the key points from Marin Software's release that helped send the stock nosediving further during yesterday's trade. While this may have spurred it on, it also is worth highlighting that the sentiment in the stock has not been strong since last week, and it was already on a downward trajectory. However, like many things in the stock market, this news catalyst, which perhaps incited a slight overreaction, only helped to push it down more dramatically, with a 27% decline in the price for the day. So let's go through the key points of this report. So the first point was from the report headlines. Net cash revenues are estimated to be a total of 6.1 million compared to 7.3 million in the second quarter of last year. So revenues are down from last year. GAAP loss from operations, I'll talk about what GAAP is in a second, is estimated to be ranging from 3 million to 3.3 million, as opposed to the realized value of $4.5 million loss this time last year. Non-GAAP loss from operations is estimated to range from 2.8 million to 3.1 million compared to 3.6 million this time last year. Cash equivalents and restricted cash are estimated to be 14.4 million in the aggregate of June 30, 2021. So they still have $14.4 million of cash. Now some of you are probably wondering what is meant by GAAP or GAAP and non-GAAP. This acronym stands for Generally Accepted Accounting Principles. So public companies have a legal obligation to file official reports using the Generally Accepted Accounting Principles. The use of these principles are to ensure that company reporting is accurate and consistent with other publicly listed companies, and part of their design is to take into account non-cash expenses / revenues and assets and liabilities. It is basically the system that allows businesses to write off and balance previous losses against future profits. So it is important that companies adhere to the generally accepted accounting principles in their financial records and statements. The reason why a business may also include non-GAAP numbers is for the benefit of investors, as it allows them to sift through the numbers of the company and get a more realistic idea on the actual cash costs of running the business. So for instance, if we look at the items here, they talk about amortization costs. So the outflows of cash from their books for this item have actually already occurred. So this system of writing off the asset is a non-cash expense that makes the loss of Marin Software look worse than it is from a cash perspective, just like the item of plus stock-based compensation. Conversely, the bracketed items less CARES employee retention credit and less capitalization of internally developed software have the opposite effect on the books. They look like boosts to profit when they are not really from a cash perspective. So for this reason, the GAAP numbers allow investors to get a better perspective, or at least a different perspective, of the reality of what the books are like, which allows them to make a slightly more informed decision on investment choice. So what we can take away from this point is that the officially reported loss for Marin Software is going to be larger than it materially is, which is good in a sense as it gives the company a slightly larger amount to write off against future profits, though at the end of the day it is still a loss. Secondly, when comparing the loss this quarter versus the loss for the period last year, so either 3.6 if you're using the non-GAAP or 4.5 if you're using the GAAP, we do see an improvement, as this quarter's loss of 3 million is better than the 4.5 million last year. This does reflect improvement in the company, and keep in mind that both of these quarters being looked at right now are arguably the two that were most affected by lockdowns in the USA last year and this year. Also, Marin Software was probably hurt even more during last year's lockdown, as they were already going through a financially rough period leading into the pandemic. So firstly, to see these continued losses is not surprising. However, it is somewhat encouraging to know that the operating losses are getting smaller compared to this time last year. However, as we can see with the item net income, which is another term for net profit, what has perhaps scared some investors is that this preliminary figure of around 3 million is a bigger loss than what was experienced in quarter one this year, being a $2 million loss. However, when you consider the drop in revenue from the lockdowns and the fact that quarter two is typically a quieter time of year for the advertising industry than, say, quarters one and quarter four, as it is away from many of their heavily promoted periods such as Christmas, New Year's, Easter, Black Friday, sales, etc., I think we get a picture that It's not as stark as the market reacted to yesterday for Marin Software, and is probably very much what the market should have been expecting for these results. Now, looking very quickly at the latest short data for Marin Software, we can see that yesterday saw a decline in shorts activity compared to other days, which makes me think that short sellers have been profiting and not as many are taking up new positions at the current level. This thesis is further supported by the continuing fall in the shorts borrow rate, which was up at 210% just a week and a half ago, 150% on Tuesday, and coming into Friday is now only at 102%. This is reflective of the stock price coming down and likely a shrinking in the overall short position held in the stock, which was up at 47% of outstanding float going into Wednesday's session, and I'm now guessing is much lower. I'm hoping that now the short squeeze action and the subsequent short seller cash in has passed, we may get to see some more normalized trading, but I'm a little bit pessimistic about this because it looks like the stock will still carry a heavy outstanding short position in the near future. While it is drastically lower, the current short borrow fee of 102.27% is still quite high and lends itself to the idea that there is still a large outstanding short position in the stock. Going forward, I'm still optimistic about Marin Software turning profitable again soon. They have a market-leading offering in the advertising industry that positions them well. They are a global company and have a very scalable business. I do think that last week's highs were riding off a potential short squeeze, and I think this week's dip has probably allowed a number of short sellers to free up their positions, therefore removing some of the heat from the stock movements. I still think it's going to be a bit of a roller coaster ride going forward, albeit maybe one for younger children. I still think it's going to be a little bit of a roller coaster ride for this stock going forward into the near future. And for that reason, I'm kind of just going to still be avoiding it for now. If there are some more normalized movements emerging, such as what was seen in the back half of yesterday's trade, I may look to day trade the stock once more. I think that the high mark of $27 won't be seen again in the near future, as well as the low point of $2. The stock looks to be finding a more normalized trading range somewhere in between. So I think that range between the $10 to $20 mark is potentially a realistic range for the stock to trade in, but we'll just have to see how that pans out. Anyway, that's all I have for this video. I hope you found it useful. If so, please give it a like. It's one of the simplest and best things you can do to support a small channel such as my one. Also, if you would like to receive more updates on stocks I'm watching and investing in, feel free to subscribe to the channel. I'm aiming to get at least a video out each day on such topics. Thanks again for watching. I really appreciate your support. May the markets trade in your favor. Have a great day, guys. Cheers.